Today is Thursday, May the 14th, and we did start down, and that is easily explained because if you just look, let's go to the chart. The S&P opened where it closed yesterday, obviously, but right at the top of the cloud. And then I was following it on the 5 minutes. And this is what it looked like on the 5 minutes, but let's change that to a daily cloud. And this is what it looked like on a 5-minute candle with the daily cloud underneath. And we did dip, but when we started to move up, and as soon as we saw the turn in the 8 EMA, I got out of all of my SPY positions, my put verticals that were in my trading account. I kept some in the same IRA that I have Caterpillar, just to offset any further Caterpillar losses. But I was able to take off the SPY ones. I'm ready to put them back on again because that's what it's all about. We finished above the Woody's pivot line. Let's go back to the rest of our information. So the market just continued to move up all the way into the close, and it was sparked a lot by that turnaround in the banks. Why? I haven't been able to find out. Lots of green. Apple, Microsoft, Google, Facebook, Amazon, Home Depot. We're going to look at those stocks in the charts. Our stock market breadth, and I was convinced yesterday that we were going even lower into this area here. It doesn't mean that we're not going to get there. We've just gotten a little bit of a relief and bouncing off that oversold line. And we've seen it before. We often see these bounces off the oversold line, but they do end up coming down. Here, and all of this cluster here. So we're not out of the woods on the coronavirus thing. The comments that the Fed chairman made yesterday are still as valid today as they were yesterday. So we have to keep an open mind and be prepared for a turnaround in the market. But today was just a little bit of a breather. Not a big one, but a little bit. So we look at the oscillator, a little bit of a bump. The volume was actually was lower today than yesterday. And we look at the shares traded. The shares traded for the buying was the advancers was much higher than the decliners. So that was quite a bit different than we might have just seen in the advancers and decliners. They only differed. Advancers and decliners only differed by 261, but their volume was significantly higher. We had twice as much volume on the up stocks as we did on the decliners. And our summation index, you can barely see it there, it's a terrible chart, but the summation index is starting to turn down. And you remember we were trying to look for this kind of a pattern repeating itself, and it may be. So what's happened to the summation index? Let's look at the raw numbers, and you can see that the summation index hit a high of 1546, then it went down to 1532, 1401, and took a big drop today at 1300. So let's keep an eye on our summation index, which is what we look at for 3 to 6 months out. But for the time being, the oscillator is what we look at, and I just don't think that that bump up is very convincing. We may end Friday a little bit higher, but I would be prepared to jump into my put positions next week. And if I see any weakness, that's just what I'm going to do. I'm going to jump into them late tomorrow and have them ready for Monday morning. So let's look at the charts. The SPX, that's the 5-minute that we were looking at before. Let's look at the daily. And the daily ended up just below the 8, above the 50, but again, using the cloud as support. Now, where did we... Let's see if we can just draw a green line right here and show that that was our bottom of the day. And where was that from a chikou span point of view? Look at that. We did talk about this candle as being possibly support today, and that's exactly what happened. The chikou span at one point today got as low as the top of this candle, found support and bounced. You don't need to see any more about the Ichimoku system than this to see how the cloud has been so important to daily price closing and intraday activity, finding support on a candle 26 days behind the current one. Pretty impressive. Apple ended up $1.85 higher, including after hours, but since it's completed its Gartley, it's still taking a bit of a move down. Now we might have to look at the hourly chart to find our ABCD pattern that always follows a Gartley, and we may have to do that once we have a little bit more data. But Apple is going to be ruled by this Gartley high for a little bit longer. Down $10 today was Wayfair, who had earnings, and I missed the fact that they were having earnings. But I would have even thought that if their earnings were bad, the outlook for the stock would still be good, and it still is. And I'm still holding on to some of my position. You know that I sold some of it up here, but I've still got some, like 3 contracts, which are, I think, 295, 297.5 and 297.5 and 202.5. Caterpillar still struggling, finished really at the high of the day, near the high of the day, so that's pretty good. Cisco up $1.85, has now found decent support on the cloud. A good time to buy it would be when it passes the 200 extended moving average, and the chikou span is now going to find its resistance here, which would be just above this candle. So let's keep an eye on that one. FSLY continuing to chug away, Andy. GDX still underneath the trend line. Home Depot earnings on Tuesday. There's a good chance, a better than good chance, that I will buy some stock tomorrow, but I may wait till Monday. I want to buy stock and sell calls, although I feel that the stock is going to report well. We don't know what they might say about the next quarter. But if we look at Home Depot options, the volatility this week on the options is in the 25%. But next week, the volatility on the 235s is 52%. That means to buy an option is getting more expensive, which means to sell an option is getting more lucrative. Right now, the stock is trading at 234, let's say 235. If you were to sell next week's 235 call, you get a $7 protection. That's pretty attractive. That's a quick $700 profit if they go up, and it's a $700 or a $7 buffer if they should go down. The anticipated market maker move for Home Depot, we'll find out tomorrow morning, but take a look for it. If you have Thinkorswim, look and see what the MMM is. That's the anticipated market maker move, and that's simply looking at the range of the at-the-money call and put spreads. Smile Direct Club pulled back a little bit more today. Andy, it might be time to take profit there. Whirlpool up, but still in the cloud, still not very impressive. What was impressive today was the banks. So we can see that Bank of America was up 5%, Goldman Sachs 2%, JP Morgan 5%, the XLF was 2.8%, US Bancorp was 6%, and Citigroup was 4%. So the banks were up. Try to find out why. Try to do some research and find out why the banks are up, because they may be what guides the market tomorrow. It's certainly what guided the market today. And I think, if I'm not mistaken, that oil had a bit of a bump also, and that would have helped the market. But what's equally helping the market is the talk in Congress that they want to provide $3 trillion of stimulus. And the Fed on Tuesday, I believe, were permitted to buy ETFs. That will have a direct impact on the underlying stock in those ETFs. Now, which ETFs they're going to buy remains to be seen. If they pick sectors like consumer discretionary, that's going to help the stock like Home Depot, Lowe's, Amazon, and Walmart. And they may be the stocks to look at. The discretionary stocks to look at would be consumer discretionary, going into the fall quarter, when we get through the summer, and things may start to look a little bit better in terms of how consumers are going out and exercising their buying power.